Hello everyone, I'm Nova Lui, RHB Bank's Head of Investors Advisory. China market, how many of you have invested into Chinese equity fund? From its recent peak in the February 2021, MSCI China index has dropped by almost 50% as of end of April this year. I'm sure a lot of investors are asking, should we continue to do cost averaging in China equity fund? Today I have Raymond from China AMC to share with you on important things that you need to know before doing further dollar cost averaging in the China equity fund. AMC is China wholly owned subsidiary of China Asset Management Company Limited that has been incorporated in Hong Kong in September 2008. As one of the major fund management company in Hong Kong, China AMC manages over 1.6 trillion renminbi of asset under management. Let's hear from the horse's mouth as an investment professional that is based in China. Hi Raymond, welcome to our Money Chat series.
Hi Nova.
China is the second largest economy with the highest population in the world. It is estimated that China will overtake US economy by 2030. But headwinds from COVID-19 and trade tension with the West has dented the investors' confidence, notwithstanding global spillover from the Russian-Ukraine war. So Raymond, China has recently locked down Shanghai and conducted mass testing in Beijing. Market has also priced in significant economic slowdown. Are we seeing any potential uplifting in the COVID restriction in China? Is it too late to do so, which has dented the economic growth in China?
Yes, actually, we anticipate that COVID-19 restriction regulations will probably be uplifted in China. Now we can still see that dynamic COVID-0 policy will stay unchanged in near term, as that the highest government in China make it clear that the country will, fight against any, speeches or questions or rejects the country's COVID control policies. Actually, if you look at the Omicron, that this wave happened in Q2 this year will surely bring, we say, extreme pressures on GDP growth this quarter. And due to the past social activities in key cities like Shanghai, actually we will see economy slowing down in key data such as PMI in Q2. But we also found Shanghai that has already passed the peak of this wave of Omicron. And Beijing seems to be exploring more effective ways to balance between virus control and city functions. And the virus spreading was still, at the early stage, so it would be a quite good example for other cities to learn. So as a conclusion, that even that the dynamic COVID-0 policies will keep unchanged in short term, but in long term, we think China will exploring some more effective ways to control the, do the balance between the virus control and the economy.
Chinese government has set a target growth of 5.5% this year. However, IMF has a different view, forecasting only 4.75% growth this year. What is your view on the IMF forecast and how China government can achieve its target growth rate, which is 5.5%? In my view, that is relatively aggressive.
And we thought that IMF's forecast is more prudent, and China's government target, we think is a little bit more aggressive, especially after the outbreak of Omicron wave since late Q1 in Q2. And 5.5% target, we thought it quite challenging. But actually, if you look at the tracking record of China's government, you can see that in last 16 years, China government only missed its target only once. So actually, we should believe that China government's, tracking record was extremely good, and execution power always beat market expectations. So actually, we will still observe the government's behavior and policies, especially after the sell-off bottom region. And I believe that we can see more expenditure by the government in infrastructures, and we can see that all other supportive policies will be issued by China government in Q2 and Q3. So actually, for the market, we think any marginal improvement on expectations will lead to a very remarkable market rebound.
Moving on, we have seen unprecedented crackdown on large internet, e-commerce and social media companies. Since end of last year, a lot of fund managers and CIO has already opinion that we are nearing the end of such crackdown. Do we have the same view, Raymond?
Yes, actually, based on China government meeting hosted by President Xi last week, and the Chinese government emphasized they're striking a balance between regulation and innovation. And we do think the strict regulations on platform internet companies has already coming to an end, especially after the Omicron wave's outbreak. China government fully recognized that platform companies' products and services have already been a crucial part of people's lives as the important infrastructures now. So we believe that China government will support those platform companies to healthy development in the long run.
To all RHB Bank's clients, this is a very good opportunity that we have Raymond with us today. If you have any question, please put down in the comment box below. We will try to address them as soon as possible. Raymond, the US and China has placed tariff on billions of dollars of each other's goods since 2018 during Trump's administration, wanted to penalize Beijing for what it says were unfair trade practices. Fast forward today, Office of US Trade Representative announces that it would begin a statutory process that could ultimately end up removing tariff on Chinese goods in order to combat inflation. Raymond, are you optimistic that this tariff will be uplifted or at least be reduced anytime soon?
Yes, we are quite optimistic that we think some part of the tariff will be uplifted or be reduced. Uh, Actually, on May the 3rd, USTR announced it will review on tariff issue, as you know. And if the extra tariff on the first 50 billion US dollar products from China could be removed, we think China's export could be increased by 1.8% accordingly. And the US has motivations to do that, to move penalty tariffs within this year. They're trying to lower the tariff to help the US cool down the inflation in midterm. So actually, if the tariff could be reduced or uplifted, it could be quite good surprise to support China's economy and financial market in our point of view.
China equity market has been gradually trending down since February 2021. Just this year itself, MSCI China Index has dropped by more than 20%. Some of our investors has been doing a few rounds of cost averaging, however, still sitting on double-digit losses. Raymond, is it now a very attractive entry point for our investor, and are we nearing to the bottom of the downside risk for the Chinese equity market?
Yeah, we think China markets are coming to a bottom range, so that's for sure. So based on such kind of the level, we think it has great chance to get a good chance of a rebound. So if we look at the China market's performance, that since last year to this year, it didn't perform really well. So the last year, the performance mainly comes from the policy normalizations. And as you know, that China lead the world to do the normalization in fiscal policy and monetary policy last year. And in this year, we believe the poor performance mainly comes from the domestic Omicron outbreaks, as well as the overseas fluctuations. And actually, recent market down led by pessimistic expectations on short-term economy. And after drawback since February, we find that China markets two very effective ratings coming to a very attractive level. The first rating is the stock dividend to bond yield ratio. And a very important index in China is CSI 300. Its dividend to 10-year treasury bond ratio is coming to 0.9 to 1. So every time it comes to such a kind of the level, in last 15 years, we find has 3 times. So each time in market hit the bottom, the ratio comes to over 0.9. So, and it will have a remarkable turnaround and uptrend. And now the market reached the ratio again. So actually, we believe it's quite effective to identify the bottom range of China market. And second ratio is the valuation of CSI 500, and also came to record low. So the forward P ratio now is below 14 times P multiples, and PB is also comes below 1.5 times. So we believe China equity has already came to bottom range. Even we need to wait fundamentals to improve marginally to feel more comfortable. But actually, usually the market will went ahead or will go ahead of the fundamentals.
Assuming eventually China market and economy will recover, which I trust it will, would this recovery be broad-based or selectively on a few sectors? Can you share some view on any sectors that China AMC is positive on, and what are the catalysts for these sectors?
We think that the turnaround should be a broad base in our point of view. The reason is just like I mentioned before, the valuation is extremely low and the expectation are extremely pessimistic. So we think if there is a turnaround, it should be a broad base. But in such kind of broad based turnaround, we also have sectors we favor. So we are optimistic towards there's growth potential of high-end manufacturing sectors and technology sectors in China. And also, we favor consumption and healthcare sectors in longer perspective. So due to the Omicron outbreaks in Q2 this year, we are optimistic on consumption recover in the second half of this year and onwards in next year. So actually a low base can provide potential high growth then. So if COVID policies can be modified, as we discussed earlier, we will see even stronger recovery in consumption sectors. Actually, manufacturing upgrade and the localization should be a mid to long-term story in China and will provide various opportunities. For example, based on carbon neutral target in China, we favor solar energy supply chain companies and EV supply chain companies. And leading companies within these supply chains had unique competitive advantages in China and globally and had great upside potential.
Great, we have come to my last question for our Money Chat series today. With a mix of catalysts and distractors, what is your final message to our potential investors who are observing the bottom of China market as well as existing investors who are holding on to China fund at a significant loss?
We believe China is a great choice to invest as the second largest economy and have a large, upside potential. So even the volatility is bigger recently. But as we discussed earlier, after these 2 years valuation shrink or normalization, China equity has limited downside risk in our point of view. So when the market is extremely pessimistic, it provides investors great opportunities to chase absolute return and relative return. So reviewing past the China stock cycles, a 30% drawback is not rare, and potential reward usually go beyond market expectation after that. So we believe it's a good entry point now, and if it's a new investor who are interested in China market, you should start to look at the market. And if you're existing investor who are already holding China stocks or fund, it's in our point of view, it's a good time period to add more. Because if you look at past circles, usually 1 year bearish, and after that will be a 3 years bullish. So now we're coming to this point. It's still a quite good time period to add more in our point of view.
Thank you very much, Raymond, for your insightful sharing. It's a great honor for our investor to hear from you directly, which will benefit from your sharing and provide them with a better idea on the current investment risks and opportunities for investing in China. With these investors, will be able to make better investment decisions.
Yeah, thanks a lot. Thanks, Nara, for having me here to share with the investors. It's quite a pleasure to be here. Thank you.
China is without a doubt an important country that contributes to the world economy. With appropriate risk appetite and patience, investors may potentially reap high rewards in long-term trajectory. Approach your RHB Bank's relationship manager now to review your investment portfolio to have a well-diversified investment portfolio. With the weakness in China equity market, this is also reflected in the fund performance. However, this may potentially offer attractive entry point for investors. With this, I show the past 1 year performance of the fund's China funds available on the RHB Bank's platform. Past performance doesn't guarantee future return. However, if it could be any guidance, I present to you also the performance of the major China indices in the past 5 years for your reference. Thank you again for tuning into RHB Money Chat. Stay tuned for our next episode of RHB Money Chat for more insight. See you again.